Hello, and a very, very good morning to everyone. It is indeed a pleasure to be here at this event organized by the UNCDF in partnership with the Singapore FinTech Festival. I'm continuing on from our theme of building inclusive economies in digital era. I'm very privileged to be moderating this panel session on Islamic finance. Now, with the help of our distinguished panel of experts, specifically, we will be looking at the impact of COVID-19 on financial inclusion and how fintech and Islamic social instruments can help build a shock responsiveness in Islamic finance. Now, we are joined by 4 gentlemen for this session, all experts and knowledgeable in their respective fields. And it is a very diverse lineup in terms of experience. From the banking side, we have Mr. Yuzadi Yusoff, an independent non-executive director of Bank Islam Malaysia with over 30 years of consulting and entrepreneurial experience in Asia. We also have our fintech guys. We have Umar Munshi, founder and CEO of Ethis, a pioneering group of Islamic crowdfunding platforms. We have Mr. Owais Zaidi, the founder and CEO of CreditFix, who has over 24 years experience in the tech scene. And of course, we have Dr. Humayon, the Director General at Cambridge Institute of Islamic Finance, an Islamic finance expert with over 2 decades of experience. So we're in really good hands today. And I would like us to start our panel discussion with a little contextualization. So I would like to get the opinions of each panelist on how the Islamic finance industry has performed in the last year amid this pandemic. What are the key challenges that Islamic finance has faced, and how has COVID-19 sort of amplified these challenges? Perhaps if we could start with Mr. Yuzadi, could you go first?
Yeah, thank you, Vineeta. A very good morning, good afternoon to some of you. Regards to COVID-19, the pandemic, I think one of the most very apparent outcome of this was we had to expedite many of the initiatives when it comes to social financing because of COVID-19. So that has made us more rigor in our approaches and expediting in terms of introducing new enhanced Islamic finance instruments to cater for the demands out there. So that's one of the main things that we actually experienced with COVID-19.
Right. Okay. And what about Dr. Da? What's your observation?
Well, COVID-19 has shaken everything. Okay, this is a global phenomenon which has affected all the economies of the world, and Islamic finance being a very small activity within financial services, it's not an exception. And whatever response has come from Islamic finance, okay, this is basically in the context of financial services industry. And I would come to this point later. The significant response we have seen from the global Islamic financial services industry, that has actually come from Islamic Development Bank, which spearheaded a movement on how to respond to this kind of exogenous shocks. COVID-19 is an exogenous shock to the global economy and all its components, including Islamic finance. And the way the world has responded to this is in terms of short-term measures, medium-term approach, and long-term approach. And I think during this conversation today, we are going to look into all these aspects of the response to this exogenous shock.
Definitely, and we'll definitely circle back to the approaches that you've so kindly mentioned. Umar, what's your take on what has happened so far?
Sure, thank you, Vineeta. To add on to what Dr. Dar and Zaidi mentioned earlier, I think one very apparent change that we have observed in our business, and our friends have also experienced the same, the other fintech players have also experienced the same, is that there is this increasing awareness among the general finance landscape or community globally that there are some interesting solutions in Islamic finance that may not have been considered before or may not have been properly understood in the past. And I'm referring to the, maybe not so typical or traditional parties who are now interested in Islamic finance, but previously maybe Islamic finance was not so much on their radar. Yeah, so I'm referring more to from the big guys, from the World Bank to community level organizations and even fintechs. Islamic finance is now seen to be an avenue for viable solutions. And this is something that I see has increased dramatically in the last few months. And it's very, very encouraging, because my view and my belief is that Islamic finance has always had good solutions for humanity. However, it was not well understood or maybe not well marketed. Yeah.
Yeah, absolutely. That's really an astute observation, because there is indeed an increasing prominence or take-up in some of the instruments or Islamic finance mechanism, as you've shared. And we will talk about that a lot more later in the session. Owais, what about you?
So my startup, we're focused on the lending part, right? And we do Sharia compliant lending. We saw, and lending was the worst affected sector of all the financial, domains. But the whole Islamic finance bit in a way helped us, right? And a lot of players like us, simply for the fact that when generally payments are delayed, there are late payment charges, and there's penal interest and things like that. But when you're running a Sharia compliant model, then you are not allowed to charge that. Even if you charge it, you have to donate it to a charity rather than book it as income. So there was less pressure on us to, from that angle, to increase income through this, delays. And there was more flexibility both at the board level of accommodating the borrowers as much as we can. So the whole fundamental humane approach of designing programs and offering Sharia compliant lending in a way really provides that kind of shock proof. Another important thing we saw, because we do very strict Sharia compliance and all our lending is use case lending, right? So we saw that where the use cases were properly defined, we had to reschedule and give some relief at large when there was complete shutdown. But we also saw that when people got back on their feet, it was very easy for them to start repaying and coming up, becoming current. So we saw challenges across the board, but we saw lesser challenges when the Islamic financial approach was taken.
Right. So there seems to be more like a natural fit or a resilience that Islamic finance could offer. All right, Mr. Yuzadi, if I can go back to you. So I'm curious to know, in response to the challenges that all our colleagues have shared earlier, what are some of the meaningful or effective concrete measures taken by banks like Bank Islam and also stakeholders in response in addressing these challenges?
Okay. See, the thing is, just to put some context into this, even before the pandemic, if you look at the statistics in the Department of Statistics Malaysia, our GDP per capita across the states are not even. They are not even. The average about 10,600 USD, and then some of the states are actually less than half of that. So, and we also realized that from the research from Khazanah, the absolute terms in terms of income gap, it's widening by the year. 1970, for example, is what $785 more between the T20 and the P40. But 4 years ago, the difference is about 3,000 USD. So you could see that there is some issues in terms of inequality. So Bank Islam, we realized that yes, Islamic finance can and should play a bigger role in eliminating some of this poverty and reduce inequality. So back 3 or 4 years ago, we embarked on this Code 1 program, looking at how do we establish structured and well-governed looking at philanthropy-based economy, sadaqah, wakaf, and zakat. So we came up with some structures, scholars, Sharia experts, academicians. So everything was in place. Unfortunately, or fortunately, COVID-19 pandemic hit us big time. So our timeline that we were planning to do, everything went haywire. Milestones have to be brought forward. We had to reprioritize our serverings, our services, our offerings, and we had to introduce new ones. So Alhamdulillah, when the government of Malaysia announced the Zakat microfinancing program as part of its Prihatin economic stimulus package back in March, we were ready. So we know that we had the structure in place, framework in place, so we know we can do it. So we to sustain the economic productivity of the B40 micro entrepreneurs. So that's what we did. Yes, we had to balance between the lives and livelihoods. We went along with that. But at the board level, we realized that it's not enough. We have to do more things, and we have to do it fast. So some people actually look at traditional banks like us as being big, slow, and sluggish. So we improvised. So what we did was we sent out speedboats with motley crews on it. So we sent out people, our crew in Islamic social finance, crew on digital, crew on wealth management, and SME. So for example, in social finance, we actually had the team work very closely with a supervisory council and look at what other social finance instruments can we introduce now. Find out who are the NGOs out there who are experts on the field, and we know that we can work with them, and we call them the change makers. And of course, we partner with our government agencies and institutions. So together, we actually introduce and deploy our social finance instruments to the needy. On the digital side, so we actually look at, okay, how best can we reach them? Nowadays, social distance is an issue. Physical distance is a problem, it's a norm. So how do we reach out our target segments? Can we work with the fintech players? Or should we build our own MLPs? What do we need to do to enhance industry? Those are the things that this team in the speedboats are actually looking and do things quickly. What about on the wealth? As you know, the OPR was reduced 125 basis points. So our BIMAB investment stepped up and introduced the world's first Sharia sustainability robo-intelligence mobile app called Best Invest, helping to provide alternatives to investors. And last month, when our Malaysia Securities Commission launched the Wakaf Featured Fund Framework, a new framework to facilitate the offering of Islamic funds with Wakaf features, our wealth management crew worked doubly overtime to structure and figure out, can we actually introduce a unit trust fund, Wakaf fund, to enable the growth of the Islamic social finance segment as quickly as possible. As for the SMEs, we work on digital proposition for the SMEs and see how we can work together and come up with the ecosystem play, especially in the halal industry. So those are some of the things that we actually did. And all this under the watchful eye of the risks, our compliance, our Sharia council, our cybersecurity teams, and of course the board, all deciding at the mothership while our speedboats go on and look for solutions.
I think it's extremely encouraging that Islamic financial institutions like yourself could be so agile in terms of trying to mobilize appropriate resources and come up with the right instruments to effectively address the challenge that we have. And it's time and time again we see Islamic social finance instruments being brought into the picture. Dr. Dar, I would like to get your expert opinion on perhaps elaboration a little bit more on the types of social instruments available that can actually help. And do you see, what is taking place in Malaysia, what Malaysian Islamic banks do? Do you see that in other countries as well in terms of adoption of Islamic social finance instruments?
All right, I will go back a bit before I answer this question. There should have been, and there were, three types of responses to COVID-19: the short term, medium term, and long term. And these three types of responses could be referred with respect to Islamic Development Bank's approach, which is based on 3 R's: respond, which is short term; restore, which is medium term; and restart, which is the long term approach. The short term approach was basically to shut down the things, okay, and restructure the deals, as my colleague Owais has mentioned, restructuring of debt. This is slightly more difficult in an Islamic context, but given the emergency of COVID-19, a lot of exceptions were accepted by the players in the industry to come up with an immediate response. In the medium term, a number of measures could have been taken, and some of them they have already been taken, and some others which haven't been taken, they should be considered by Islamic financial institutions. The first medium-term measure is for Islamic finance to reassess its exposure to risk and come up with the implications for the stability of Islamic financial institutions and Islamic financial services industry as a whole. The second measure which could be taken, and this is being considered by a number of Islamic financial institutions already. Bank Islam is one leading player here, but quite a number of Indonesian institutions are also on the forefront of this initiative as well. And that is the use of Islamic social finance instruments. I think, okay, this is the time for Islamic banks and financial institutions to start focusing on waqf. Okay. In the context of COVID-19, a number of Islamic financial institutions were not ready to respond quickly because the money wasn't available. And if we have a buffer zone created through a structure like waqf, I think Islamic financial institutions would have been in a lot better position to come up with a response with a view to restore the problems with the system. Now, cash waqf linked instruments, this is one thing which Islamic banks and financial institutions should be looking into. Indonesia has taken a lead in terms of introducing cash waqf linked sukuk. Bank Islam Malaysia in Malaysia has also issued, has been involved in cash waqf linked deposit schemes for quite a number of their clients coming from the state-linked bodies like Agama Islam, etc. So I think the more use of waqf, this is something Islamic financial institutions will have to look into with a lot of more rigor. And waqf, when we talk about waqf, normally we think about something, an old kind of institution, but in the context of Islamic finance, a lot of research has been done and a number of guidelines have come up to make sure that waqf is a modern instrument which can be used for financial services industry on one hand side and for the social sector development on the other hand side as well. The another thing which now Islamic banks should be considering very aggressively is their role, their active role in Zakat collection, management, and disbursement. As of now, mainly Islamic banks have been involved in the Zakat process as bankers to the Zakat authorities. And I believe this is the time that Islamic banks and financial institutions should be working with multilateral institutions like United Nations, okay, to come up with the products which are Zakat oriented, not only serving as Zakat bodies, bankers, but rather it should be an active player in the Zakat collection, management, and disbursement. And when I refer to Zakat management, okay, this is a very tricky area, and here Sharia scholars and some other relevant stakeholders, they should sit and come up with a new view which should allow the asset management function within the domain of Zakat. In fact, Malaysia was very pioneer, quite a few years back, actually more than 10 years back. I was personally involved in a project which was spearheaded by the Malaysians that was called Global Zakat Fund. And we faced a lot of issues at that time, but I think given the global dimensions of COVID-19, this is the time for a government like Malaysia or Indonesia or any other government to come up with a global Zakat fund, which could be used for responding to the exogenous shocks like COVID-19. And at the end, I would like to mention the role of Sukuk. Again, someone who has worked for Islamic Development Bank, and I'm aware of a lot of good work the institution is doing. Islamic Development Bank was the first institution to come up with a global Sukuk focusing on COVID-19. Back in June this year, Islamic Development Bank issued its first $1.5 billion sustainability sukuk with a special focus on COVID-19. That was followed by the Malaysians. Ministry of Finance came up with a 500 million sukuk, which was 500 million ringgit sukuk, which had focus on COVID-19. And this was issued, I think, on the 18th of June, and 10 days after that, 28th of June, Indonesians, they came up with even a bigger sukuk, which I believe was about 5 trillion rupiah, about 342 million US dollars. And I think, okay, in the months to come and in 2021, sukuk is going to play a very significant role in terms of the second phase, the medium term, and the long term as well. With the long term comes, I would like to mention that Islamic finance should start looking into its role within the wider Islamic economic framework. Islamic finance, not only for financial intermediation, but Islamic finance for socio-economic development. And this is something COVID-19 has pushed Islamic financial services industry to go into.
Thank you so much, Dr. Dar. And indeed, I really like what you said about wakaf, zakat, and sadaqah. We've seen a lot more adoption in this. We see obviously traditional financial institution also looking at this. And also, we are also seeing this from the fintech side. So Umar, you are in a unique position. You are a fintech player, obviously, and also the whole proposition of this or global sadaqah is using Islamic social finance instruments. I'd like to get your opinion on what are some of the technological innovations that can be sort of examples to sort of protect the economy or protect the people from such shocks like the pandemic. Umar, over to you.
Sure. Before I jump into that, maybe I just wanted to say that I was quite happy when I heard some statements from Cik Yuzadi earlier, specifically about the speedboats in Bank Islam. So that's really great, because we have been in our own activities working or trying to work with many banks, and I think this speedboat analogy is something that a lot of banks should look into, so that the gigantic ship of the bank can actually move quickly because of speedboats. And the other thing he mentioned about working with the ecosystem, I think that's also incredibly important and in line with the direction to add for banks in Malaysia to add more value to society, not just the transactional capabilities. Yeah, so I want to just touch quickly on that. As a fintech, I mean, any fintech probably would want to move fast and typically can move fast. So maybe the addition there is that although we don't have the big boat, we ourselves are speedboats, and we also have some divers who can jump in and get the debt when needed. So yeah, the collaboration component I think is incredibly important. Fintechs will try and make things work no matter what, or with whoever wants to work with us. But I think the more the incumbents, the large organizations and institutions and banks open to and forthcoming to work with fintechs, I think it'll be beneficial for everyone. Yeah, and also to touch on Dr. Humayon's, Dr. Dar's point on Wakaf. Yeah, so at Ethis, we do see this kind of sustainable social finance models as very, very powerful, and sadly not fully utilized at scale yet, or maybe we're just barely scratching the surface right now. Whereas in previous civilizations or previous times in the past, such models had tremendous impact and value to society and communities, to the extent that there were periods of time where there was even no poverty, right? Effectively no poverty. So today, with technology, I think the key value that technology adds, and I won't go into like emerging technologies, AI, blockchain, and the like. Of course, all of that are potential game changers. But what the immediate impact that I see right now is actually this connectivity and the digitalization of things that were just not accessible in the past, and through native digital solutions coming out from solution providers and fintechs. And this is what I feel will have the most impact when it comes to implementing social finance or sustainable finance and impactful commercial finance, because then you can reach the masses, and not only can you reach the masses, you can reach the masses in a nimble way, in a swift and nimble way. You can pivot, you can adjust, you can target small pools of people, and from there, through this kind of iterative delivery of microservices, then that's where with data and experience, that's where solutions can figure out how to really solve problems, and that's how problems will start to get solved. And when there are specific cases or use cases or scenarios where the delivery of solutions is effective, then you can scale up very quickly, right? So one thing that we are trying to do is a concept called Kad Hasan, which is a benevolent or altruistic loan, a loan that does not bring any benefit to the lender and does not have any negative repercussion or impact on the borrower. And when we did some research, and for some time we have known as well that there are large-scale success stories of Kad Hasan being implemented, specifically in Pakistan and in Indonesia. And so what we've done is we've reached out to these organizations that have collectively delivered and lent out more than $1 billion with very, very low default rates, and no fees, no cost, no interest to the borrower. And now we're trying to see how we can implement it in Malaysia first and in other countries. Now, what we're trying to do is we're trying to marry this real-world, on-ground, community-level intelligence and capability to provide micro-lending at no cost, and marry that with the nimbleness and technology capabilities of a startup. And hopefully we can break the code and figure out how to really scale this in a global at a global level. Yeah, so those are a few things that I wanted to share. And just to reiterate, my key point here is about how technology creates this level of connectivity and access that we've never seen before. And secondly, how startups can add this additional layer of, I guess you say, startup hustle, nimbleness, speed, together with the ecosystem, the incumbents who are there. Yeah.
Thank you, Omar. And I think this is like a recurring theme that I'm hearing from you, from Zaidi, from even Dr. Dar earlier, talking about how this collaboration within the ecosystem, different ecosystem stakeholders are required for effective solutions. Owais, what about you? Like, what sort of technological innovations are we seeing in this space, amid this pandemic?
So just a little bit of context, Vineeta. Basically, I've been part of Islamic finance and structured finance since 90s. So, in the earlier days, and a lot of gentlemen here would remember, there was a lot of emphasis on how complicated it is to do Islamic transaction, right? There are more steps, there's more paperwork, and there is more compliance requirement, right? So I think if we look at it today in 2020, so the spirit stays the same. That stayed there for 1,400 years, about inclusiveness, it's about fairness, about ethical values and humanity. But the technology today allows us in this year to do everything at scale, do it with better compliance, and take away the complexity, right? There's a lot of technology in machine learning, data science that is available, blockchain, Umar mentioned. I think all these are just building blocks that can be very effectively leveraged today to deliver Islamic financial solutions to the market, right? And while ensuring compliance and taking away all the complexity in the paperwork. So today we are seeing risk at scale. So we talk about COVID and how it's affecting everything. Now, when you're doing risk assessment, you look at all the variables that are there, right? And now there is another variable in the mix when you do risk assessment is that, hey, things can shut down, right? There could be another spread, there could be another series of lockdowns. What happens there? So today the technology allows us to model these things at a much faster and more effective way. So that's one aspect. The other aspect is that what I think everybody mentioned on the panel is the ability to reach out today. I think so the biggest game changer in the past, I think 15, 20 years has been the mobility and connectivity, right? So now everybody has a mobile phone in their hand. There's data connectivity on that, and that is really available to the masses. I mean, we're seeing, in Malaysia, Indonesia, it's extremely high, but even in other emerging markets, we're seeing smartphone penetration hitting 40, 50, 60%. So when smartphone implies that there's 3G and 4G on the phone. So now you have a direct connection to the consumer, to the small business owner. You're able to interact better. You're able to get data quicker, more effectively. You're able to reach out, understand their problems, and the biggest of all is the mass personalization, right? Technology allows us to tailor our products for each and every segment there is. Umar mentioned that he's looking at micro lending. I think there's some great examples, especially in Pakistan on Qarza Hasna that he's mentioning about. I'm sure you're in touch with some of them. They've really done it at billions of dollars dispersed with default rates below 1%. And now that can be replicated across markets. All those learnings can be built into risk scale models and can be just rolled out without incurring the kind of overheads and costs that traditionally are associated with lending at mass scales or investment programs at mass scales. So I think technology is the great game changer. In 2020, we have the building blocks available, and that's really driving even a fintech startup like us to comfortably adopt the Islamic financial models without overly worrying about compliance and paperwork, because technology takes it all away. So the key point that I'm trying to drive is that now I think the ecosystem players have enough data. I think now the collaboration needs to happen, that different organizations and ecosystem players come together, share the data, and try to reach out to the target segments in a more effective and cost efficient manner, and that will drive more adoption and more inclusion for the masses.
I do want to go in deeper about the whole process of digitalization and sort of the process. But before that, I want to circle back to what Umar mentioned earlier when you were doing your sharing, is about the fact that, Islamic social instruments are not new, of course. And we are seeing a gradual take up now. But at the same time, it has it has not reached the kind of effectiveness that we would like. So really, my question is, how effective have like wakaf or zakat, have they been mobilized, or what is sort of like stopping? What is preventing it from full adoption, from us really utilizing such instruments? And Zaidi or Dr. Dar, Umar, if you could share your 2 cents on it.
I can. Okay.
All right, Dr. Dar.
I think, okay, because this is something with reference to technology, and I would say that because of the primitive technology available to us in the past, there were a number of things which we couldn't do in past. However, this is now possible. I'll give you an example of a global charity product. There are different estimates of global Muslim population. I tend to take the figure of 2 billion because it's more convenient for calculations, but I think it's quite close to the actual reality as well. So 2 billion Muslims are there out in the world. If we create a global charity platform which incentivizes people to contribute charity, I cannot go into all the details of this one, but this could be something similar to a Sharia compliant lottery. Okay. If out of 2 billion people, 100 million people on a daily basis, they play this game of contributing $1 to this charity box, and through this incentivization program, which would allow us to disperse 60% of or an amount equivalent to 60% of the collections, to the people. Okay. We can actually have about 400 millionaires every week, which would mean about I would say about 20,000 millionaires per year, and about 100,000 millionaires per 5 years. Okay, so this would be a mechanism which can use to empower people. Okay. And this could be in the context of Waqf, this could be in the context of another charitable trust which we can come up with. So technology is a game changer, as Owais mentioned. And if in addition to this global product, we can come up with national products as well. If we apply the same model Owais in Pakistan, for example, that would allow anyone who is offering this kind of product to collect about 1 billion rupees on a daily basis. This wasn't possible before the kind of technology we are using. So 1 billion rupees on a daily basis means you can actually come up with a lot of financial empowerment, focusing on individuals. Normally, sometimes, when we have this microfinance, microcredit kind of things, we look at big numbers. Big numbers should be in the form of contributors, but empowerment, it's in small numbers. In one day, this could be only 5 people you have empowered, but over a period of 1 year, that would be a very big number. So I think these concepts, Islamic concepts, which have in the past been very effective, they became ineffective for a variety of reasons. But now this is the time, with the help of technology, these concepts can be resurrected for the benefit of the societies around the world.
Definitely. Does anyone want to add on to that?
Yeah, if I may add, it's to your point, Vineeta, it is not so much it's what's stopping us. No, it's not that. It's more like we are not moving fast enough. So yes, there are instruments out there, but like what Dr. Dar was saying, how do you marry the new Islamic social finance instruments with the technology to actually cascade and propagate debt instruments faster and to the target markets. So, for example, at Bank Islam, we actually, because of the COVID-19, we introduced this thing called the, similar to what Brother Omar was saying on the microfinance. And we looked at the underbanked and unbanked micro entrepreneurs. And we call it Bangkit. Bangkit is actually loosely translated as get up. So this facility helps the micro entrepreneurs to get up, to improve their financial well-being. So the program is not so much only to provide funds, but also it comes with a toolkit. So training, coaching, mentoring, financial management. It is the first microfinancing funded by a Sadaqah and donation program by an Islamic financial institution here in Malaysia. So in that sense, and the thing is, it is not offered to the public. Let's be honest. That's why we talked about collaboration, working with the experts. So we work with the change makers, people who actually have the wider reach, people who know what's going on the ground, people can actually show a strong social impact. So you partner with them, whether it's women empowerment, whether it's students' youth, whether it's gig workers, social enterprises. So, and that's why we work together with them. So we are clear on what the criteria is. So it makes the funding cheap because there's no cost to it, and it's fast because we let the change makers scrutinize the borrower. And what's beautiful about this also, it creates a credit scoring for the borrowers. So when they are out of doldrums and ready to expand and grow its business further, not only locally, but abroad, Bank Islam will be ready to offer them the financial facility and support. So in that sense, we will grow together, not as customers, but as partners. So that's what we're looking at, how do we actually convert, how do we actually transition from a simple social finance into, a real instrument that will actually elevate, because we look at social mobility, right? How do we actually elevate our people from the B40 into M40s into T20s? So it's a journey. How do you help with that? So that's why I think working with financial technologies like ITs and the rest, even CreditFix and the rest. This is where we can actually, like I said, we need to instill a culture, a fintech culture. How do we make the financial industry become passionate and intimate about fintech? So even about Islamic scholars, our academicians, so when they think or when they talk about new instruments, how does that relate to fintech? So how can you make this combine together and come up with impactful instruments to the masses?
And Yuzadi, on your point about us not moving fast enough, and about instilling this fintech culture within the Islamic finance fraternity, what then can we do? What then can this region collectively do? Moving towards that goal.
Okay, to me, okay, let's. Malaysia was the leader in Wave 1 in Islamic banking back in the 90s, right? So I think we are ready to lead the Wave 2 of Islamic finance. Adapting to the digital fintech world. Why? We are matured when it comes to Islamic finance environment. Our business environment is cost-effective and conducive. We have readily available academicians, Islamic finance experts, and Sharia scholars. We got talents, whether it's fintech, whether it's Islamic finance. And I think our Islamic finance framework and structure is proven. And more importantly, our regulatory bodies are progressive. So if that, to me, that we have the right ingredients to actually build a global Islamic fintech hub in this region. So together, then we can actually make this a regional effort in moving Islamic fintech across the region. And if RCEP coming into the picture, what more better reason for us to actually move into that direction?
Absolutely. Umar, also Owais later. So Umar, Dr. Dar mentioned that one of the help challenges in sort of mobilizing Islamic financial social instruments is digitalization. So from a fintech player perspective, I want to understand what are some of the the challenges or obstacles that players like yourself and Owais, what do you guys face in terms of rolling out such innovations and actually making sure that the solution does connect with the people and address the issues that we are trying to solve here?
Sure. I think there are many challenges, which is normal when you're trying to do something to change the status quo. But one thing I want to highlight, which I think can be considered sensitive sometimes, is when you are moving money in the Muslim world, especially charity money, it is really complicated sometimes, especially when it comes to things like compliance and KYC, anti-money laundering, anti-terrorist financing, and so on. So that component is actually a very big challenge. Yeah. And I'm just putting it out there. It is the reality, especially charitable funds. So they're considered high-risk funds. So in my view, this is something that maybe only technology can help to solve, because technology can bring that level of transparency, traceability, and robustness that can allow for money that is moving for the right reasons to move. Because if not, the system today is, I would say, rather paralyzed when you're talking about cross-border transactions. Within a country, of course, it's much easier. But when you look at the social finance in the Muslim world, before looking at the wider, larger humanity, in the Muslim world, there are a lot of surplus countries and there are a lot of deficit countries. So bridging these two is where there can be tremendous change and impact. And that is where I feel the main challenge is. Yeah, but as I mentioned earlier, I believe it's just a matter of time before technology solves these issues, right? Because the need for the money to be given and the need for the money to be received is very high. And stakeholders everywhere want this to happen as well. Of course, there's some pushback and whatnot. So this is the first main barrier that I want to share. And the second, maybe not really a barrier, but more of the challenge is to, as what Zaidi mentioned, is to get the masses really on board, to get the speed of adoption to accelerate. And here I want to bring up some of the really incredible work that has been done in Indonesia by Basnas, the National Zakat body. They have really gone into technology in a big way, and they've done it partially in-house, partially within their organization, and also to a large extent, especially at the initial phase to break the inertia, they work with the fintech players, right? So that's something that in Malaysia, although I agree with Yuzadi, Malaysia has this potential to lead, but if we don't bring in some of these more traditional or organizations and groups on board, then other countries are already doing it right now. Yeah, so I mean it's not a competition, but I hope that this successful cases, especially in Indonesia and other countries, I think Pakistan as well, and today I believe Bangladesh, I hope this will trigger and catalyze a lot more movement at the grassroots, at the community level. Yeah.
All right, thank you. Owais, do you agree with what Umar has shared? What else do you have to add on?
So what Umar has said, absolutely in his domain, the fund transfer, especially cross-border for charity funds, is definitely a big thing, and a lot of emerging markets are always at the FATF risk and global AML risk. So that creates challenges. I think within each individual ecosystem, the challenges are few. Like one thing Mr. Yuzadi mentioned as well was that the banks are slowly waking up, right? So banks are generally have to be conservative by design, right? They have public money. They are trusted to safeguard the depositors' funds. So they cannot be really gunslingers and going out and throwing money at radical new ideas. So fintechs have to lead the way. So they have to demonstrate that they can do it at least at a smaller scale, that then eventually banks can collaborate to help scale up. Fintechs, maybe in US it's a different market, but generally in other emerging markets, it has to be more like a collaborative play, because the bulk of the funds are held by financial institutions like banks. Secondly, regulation has been a big challenge traditionally, but I think one of the very positive outcomes of COVID has been the sudden acceleration, and regulators all over the world are waking up, and they're realizing that maybe technology and is the only way to really deliver services under a constrained environment. So even in Pakistan, where I'm based, the regulator usually has been quite progressive and forward-looking. But I see in the past 6-8 months they have really taken drastic actions to facilitate both banks and fintechs to make things happen. So regulatory challenges, collaborative challenges in ecosystem are the two main challenges. And then, of course, the last and the most important that we should never forget is the and their learning, right? So also due to COVID, their rate accelerated a lot, and we've seen. So we saw in our sector, we are in lending, right? We're in digital lending model, and we saw that a lot of comparable financial institutions percent in default rates, but our cohort went 3%. Because we used most of our cohorts, and we had really modeled the use cases. So specific, we did research when we designed products, and we tried to nail the use case after analyzing the net economic impact of that loan on that particular segment. So whether it's from a cost saving on revenue earning side, it has to deliver a net positive economic factor. And so coming back, I think user adoption, regulation, and collaboration, these are the key challenges that are there. I think COVID has woken all the key players up, and we will see a lot more collaboration. A bank can never ever be a fintech just by their design. The moment they try to be a bank, and I know a lot of fintechs carry that ambitions that we are the neobanks, I think they're just fooling themselves. The moment they get into that regulated space, they're just another bank. Regardless of how much technology they use, they will have to play by the rules that the central bank sets for that. So I think there's a lot of the only way forward is collaboration between all the ecosystem players, for the regulator to create the right rails for enabling that collaboration to happen and scale, and every player in the ecosystem working towards customer adoption and customer education. Yeah.
Very nicely put. And I see, Zaidi, you are just nodding in agreement. We do have a few more minutes left before we wrap up our session. I would like to now invite each panelist to really share your key takeaways. What's really needed for us to actually meet this goal of using Islamic social finance and digitalization, meeting SDG goals or all these social development projects. So maybe Dr. Da, you would like to start just very briefly before we go down to all the other panelists?
Right. I would actually like to agree with all the three panelists. I think, we have to focus on collaboration. Okay, a lot of things, especially with the reference to Islamic social finance, they're already there. I'll give an example from the country I'm sitting right now. In UK, we are about 3.5 million Muslims. Only in the month of Ramadan, we donate about 100 million pounds in charity. And this money is channeled primarily through charitable organizations. Islamic Relief Worldwide is one of them, but there's so many other charities as well. There are different estimates, but about 200 million pounds we, the UK Muslims, contribute in terms of charity every year. And this is only for a country where Muslims are a small minority. If you look at the global size of Muslim population, I think if Islamic banks and these charitable organizations, if they work together, the amount of money they can collect on an annual basis would be mind-boggling. And once this money is available, Islamic financial institutions and Islamic charitable organizations, all these players, they can play a very big role in the socio-economic development of the communities, not only Muslim communities, but underprivileged communities around the world. So that is something Islamic financial institutions should be looking into for their global relevance. Just focusing at Muslim communities, that would not be sufficient.
Absolutely. Thank you so much, Dr. Dar. And Yuzadi, what would be your key message?
Okay, a couple of them. I look at the SMEs. All right, so as you know, in Malaysia, for example, and what Brother Owais has said just now, what 40%, 60% are all SMEs. So in Malaysia alone, 50% of our it represents the workforce of the SMEs. So they are the ones that we need to help. And the thing is, from our experience, these SMEs, it's for them, a majority of them, they are true and true entrepreneurs. Many of them do not prefer wanting to receive helicopter money indefinitely. So what they want is a chance to opportunity to actually continue to become entrepreneurs. Right, so that's one. So we need to help them go fish again. So that's what we need to do. So that is to restart the economy. But the other angle that I'm looking at as well is, I think the pandemic has also allowed us, or given us the opportunity to not only revitalize the economy, but also we should also take the opportunity to reform the economy. What can we do to reform this economy? There's one quote that I remember from Professor Yun Chang, with Cambridge, Economies. He said, countries become good at certain industries only because they decide as much, and not because they are destined to do so. So it's a question of how do we actually look at, unrelated diversification and reach certain level of development for each of the country. So of course, we cannot just do this alone. To be effective, we need to look at who's doing what in terms of, are they good and bad? Do we need to continue? Do we need to replicate? And who provides the best impact? As pointed out by all the panelists, we have to collaborate. That's the only way we can actually cast the net wider. So for us, if we do that and using fintech as our culture, then we can, inshallah, restart the Indian economy, especially in Islamic finance, digital.
Absolutely. And Umar, over to you. 1 minute you have.
Sure. Yeah, I probably don't need the whole 1 minute. I just wanted to maybe reiterate one point, especially to the audience, the participants. I assume there would be a number who are not familiar with Islamic social finance or Islamic finance in general. So I'd like to urge everyone to just do some quick research and reading up on Islamic social finance, because fundamentally I believe that these are solutions for humanity. And I'll touch on the three maybe more common or popular ones, or more significant ones. So there's Zakat, and Zakat, in quick summary, it's a tax on wealth, which is totally different from a tax on income, right? And the wealthy have wealth, basically, maybe not so much income. So this is a means to redistribute wealth, and it's a very powerful avenue of doing so. And then there's the sustainable cash flow lending kind of business or activity, sorry, not business, which is Kad Hasan, where you lend and there's no cost or fee, and it's meant to assist instead of giving one off, and then there's also finally Wakaf. So Wakaf may be a new term for a lot of people, but essentially it's endowment. And I'm not here to give a one-on-one on social finance, but I just wanted to, touch on these points quickly for those who are not so familiar with it. And, everything is available online, so you should be able to see and understand the deeper wisdom behind this. And it can be implemented to anyone, anywhere, for any good reason.
Thank you, Umar. Owais, the last words from you.
Okay, so I'll be very brief. I know you're running short on time. So my parting notes are that so if we really look at the Islamic financial approaches in their true spirit, not just in the form dictated by our Sharia board, but in truly in essence, and combine it with the technology that is available and use a collaborative approach, I think we can drive real financial inclusion in all the markets and be really successful businessmen at the same time.
Thank you. And that, ladies and gentlemen, is a wrap. It was indeed a very rewarding discussion for me. I hope our audience have also benefited from the discussion. I'd like to really thank all the panelists, Dr. Dunn, Zaidi, Owais, and Umar for, spending the time and sharing your key insights with the public. Thank you so much.
Thank you.
Thank you.
Thank you.